Okay, now we're going to look into the fourth day of the week, going in from January the 22nd. That's the week ending date in 2010. Let's take a look. All right, this is the fourth day. Now, as you recall, we had the squeeze the previous day. Okay, let's just keep that as a note. All right, now let's go back and start our quick view logic here. The day before we closed at 91.11 with a big fall to the downside of 127 pips. This was a squeeze that popped. It popped through the barrier at 91.76. So this is a strong piece of momentum. Now we got to take this thing and go over here and look at the biases and see what we've got going on here. Starting from here, we notice right here in our 5-on-5 trend, we're into the short. I mean, it's deep in there. That negative 21, that's a good strong number. Okay, these numbers don't get very high. Everything is down and declining. We're at the bottom. No signals. The only RSI is falling. The range is falling. We have what's called the bearish takeover attempt. We see no bullishness. The only bullishness that we see, oh, by the way, also we have this small a, which is a short signal in the long term. The only bullishness that we see, and it's very weak because of the momentum, this squeeze popped really hard to the downside, which creates momentum. So, and generally, one of the general rules about squeezes are that if we go down during the squeeze day, the next day we can look for a support area for it to come up against, and then the next day down, and then the next day up. Now, as you can see, seeing as we have the advantage of reviewing historically, we can actually see where it did pop down. We could have tried going up, would have made a loss, then going down and going up would have gained. Okay, and so we would have been 3 out of 4. But this one was a new squeeze anyway. But nevertheless, from that squeeze, that would have been fine. However, even with this, if we had went long here on this day, the loss would have been very small because the support was at 90.31. That was the first area that you could have possibly taken to try and go long from, was the 90.31 here, which would have only been about a 14 or 15 pip loss. Now consider that after you've had 104, 20, 60, and another 60 or 50 pip gains. I mean, you're almost up to 200, and then you lose 15. Well, that's not a big loss. But because we have this overwhelming push to the downside, we've also got the trend that's saying we are now in a short. Okay, the consolidation, yeah, but it's when you have that, you're still looking for the barrier. We closed at 91.11. Everything is below both channels. You could have shorted at 91.60. There's no place to go long on this channel because it's above you. So trying to find a long position from that channel is impossible, even though you have the consolidation is still showing up. Okay, all right, so going short is the ticket for this day because of the momentum. Might want to consider also the fact that you've got these two double D's here. This is showing confluence that everything is moving down in your ranges of your expected highs and lows. These columns are simply, they're just indicators of what's happening here and here. This one is for this, and this one is for this. Basically, it's saying everything is moving down. If it was two U's, it means everything is moving up. If you see the E's, it means everything is expanding, meaning the lower getting lower and the high is getting higher. Okay, and if you see nothing, that means there's nothing that's working together. Okay, all right. So back to this. We're looking. You would have to look for a short at resistance. Well, where is resistance? Well, the first resistance we see is not the 91.40, but it's actually from the channel of 91.24. You could take that short, or you could take this short. Either one would have filled. You could have went to 91.60, but that's getting a little bit too aggressive, and you would have never been filled. So even if you never got filled, it would be zero. It's not been a loss, but throughout the week you've made good profit. So it's still something that you would consider as a good day. It's better to have zero than to have a negative number. And I'm just scrolling across just to make sure I haven't missed anything, and I don't see anything that I've missed. Everything is short, 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 short. No signals, short. No signals. Notice this B has nothing next to it. That's because the day before there was no top or bottom action. Okay, this is just saying it's going down, and then this is the one possibility of a possible long, which we really don't want to pay much attention to because even it is short because of the momentum. All right, this big drop that we're taking in the RSI and the directional range, everything is short. Everything is short. When you're overwhelmingly short, you need something pretty strong to help you find a reversal. Okay. Also, if you look at the chart, here's your trend line. If you remember your trend line video, the Friday, the week before all of this, we had a close below the trend line and a breach as well with this candle right here. Notice that here, let me draw it for you. Here, there's the close below the trend line, and there's the breach of the low. Even though it went back up, it never broke that high, did it? And it's been going down, and this is the day of the squeeze right here that popped underneath the floor. And so the momentum is just to the downside, so you just have to take it. You have to know when to roll with it, kind of like know when to hold them, fold them, and all that other stuff. Anyway, there you have it. One more time, QuickView has triumphed in its evaluation. If you can learn the logic, you can make a lot of money.